We're live.
This is Market Week Live, March 28th, 2025. Information and support for traders and investors. Welcome, everybody. Glad to see all of you here. Of course, we are live for our members, level 1 to 4, and also live on YouTube. So we're going to get going. Have lots to cover in here, and I think you're going to find it a very illuminating show. We're going to bring you our express round with our level 1 to 4 members. You can add your questions now into Q&A. The floor is yours, whether it's about our services, trade planning, chart analysis, trading issues, anything that we can help you on. Now's the time to put that in there. We'll be cutting that off in just a few minutes. So any questions you might have. Matt is going to review our services. He's got a special for level 3, and you're going to see the amazing depth of the content that we provide. And he even has a message to you about demoing a bunch of that for you a little later in the show. So, and I'm going to bring you the stock market analysis, some of the evidence, probabilistic projections in price and time. And you're going to see our proprietary studies and our market condition monitor. Just an amazing application that really helps you understand the direction and condition of the individual symbols. If you want to get acquainted with us, sign up in the free stuff off on the top of the website, SIR Lite. You'll get our free a report that Matt puts out every single day. On YouTube, subscribe to this channel, click the notification bell. You'll know when we post videos. Do like this video, give it a thumbs up. And on X, follow me at askSlim. Questions you might have, write to Matt at askSlim.com. This is the legal stuff, which essentially says everything that we bring you is for entertainment and education, no matter what the shape or source of it is. And you're always encouraged to consult with your investment advisor and look at your own trading plan. And you can refer to our terms, disclaimers, full legal information at askSlim.com. You have reason to contact us, whether it's membership issues or website issues, write to team at askSlim.com. And anything on our content, information, education, and analysis, first-time specials and upgrades, write to Matt at askSlim.com. We have all of our hosts here today, and you can learn about us by going to askSlim.com, meet the team, and we have some interviews there, and I think you will find that extremely interesting. Most of you know who we all are. All right, we're going to get into our questions and comments. Remember, the people that are here as level 4 members are the ones that can put questions in there right now. And we generally work at that. I started out looking at the futures. And at the end of the show, of course, I'm going to bring you the stock market and the indexes. And then the rest of the team will bring you the equities and ETFs. We don't have a ton of questions in there today. I see for me, it's natural gas and gold, which I will show you. And then for the team, I see Bud, Tesla, SMH. That's about it that we have in there right now, unless somebody puts something up in the next 2 or 3 minutes. So let's get right into this. Okay, let's take a look here as we switch over to the charts. What we have here on our left is our market condition monitor, and what we have here on this charts, I'm just going to switch this over to /GC for the gold market. Of course, gold has been absolutely screaming on the upside. I'm going to start out by looking at the weekly chart. Let me just blow this up right over here. As you can see, there's the weekly chart. And it has gone up all the way to that level of actually a target resistance up at around 31.15. These other numbers up here, this is from the daily chart, and that is at 3196 approximately, and this is a big monthly extension, which is up there at around 3286. Those are upside targets in what are this rising phase that you see right actually here. And then you had the corrective phase right in here, and that was the minor one. And here is the next rally phase and the corrective phase. Look at how that was swamped only brought you a minor decline, and now you're in this next rising phase right there. This dotted line is the silver dash line, which is out of phase with gold, a little bit later phasing in there. And this essentially is not showing you any kind of a peak at all, as it's right up at the highs right now at 3117.80. So it's likely going to begin some kind of a pullback, because when we look on the daily chart, you can see over here that these corrective phases, well, when we're under swamped conditions, they don't fall very much, as you saw happen back over here, where this rally, and you can see the slim ribbon super strong right over there, and the option bias indicator telling you keep your option positions biased on the long side. The slim ribbon PO warning you about upside resumptions, as you could see right there, as those are momentum signals, and all of that keeping you on the right side of the market on the upside. So here you could see you had a pullback here from 29.97 down to where was that low? Let me just move that line so you can see it. Down over here to 29.14. So it was only about 83-point pullback. That is a extremely small pullback, as you can see. And you probably have something like that happening over here, where it gives up, just a modest amount of ground over the next week or so, and then begins to move up again. So that is super strong when you look at that. And let's just go back and take a peek here at the market condition indicator, and we'll just put up GLD, and you can see that reading is extremely bullish, as you can see there, and it's just all the way across the board. All of the time frames in our indicators have been super bullish. So that is, just a amazingly strong condition. If you look at GDX, you can see, of course, very bullish on the GDX and GDXJ, the junior miners. So all of that has been extremely strong and keeping you on the bullish side of the market. So that's a look at the gold market. Let's take a look at the natural gas /NG. And natural gas has been, in a little bit of a corrective period, but you see that pullback when it jumped up close to $5 and then fell back here under $4. But when you're looking at this, the cyclical patterns in here, which are just gorgeous, you can see that where we are right now is still in this rising phase with momentum still going up. The targets up over here, which are up around let's just say 524, and then this one is up here at about 581. Those are still very much in play here on this weekly chart. So we're just in this kind of stall back, pulling corrective period there. When I look at the daily chart, when those cycles really are compelling to me, because they say to me that this pullback into this buy zone should begin to give you some upside movement. You could see that right here. So if it was in a negative case, and you can see in here momentum has turned onto the negative side during this correction, then even this upside here of about 423 to about 438 is what would be expected. So even in that kind of a negative case, we'd expect that. Now you can see this is running pretty long in here, as we've gotten outside of what would be the normal bottom time period right in there. And that whenever that happens, it starts to give me a little bit of a warning that something else might be going on in here. So I'm going to be alert to that possibility that something is changing. But right now, based on what I see here on the weekly and based on what I see here on the daily, the probabilities are that it will have that upside resumption and then be able to get up through those resistances. But those are going to be the testing areas up there in natural gas. So that's all the questions that were there for me. I see a question on the indexes, but we're going to be covering the indexes in just a little bit. So I'm going to turn this over to the team, and then they will look at these few symbols that we have on there.
Okay, let me share my screen. Let me know when you can see Tesla.
Got it.
Okay, perfect. So someone requested this one. As you can see, we had a giant move up to this 200% fib extension. This is the weekly chart and backed all the way off. Here's our minor cycle trough. And so we would have expected to get a bounce, and we did, and moved up towards that resistance zone. But you can see the wick on this candlestick has a lot of selling pressure. We have a weekly cycle timing window that starts June 2nd, runs through July 11th. So we would expect any rally in here that was able to get up into this zone to eventually fail and then turn back down. So you can see that we have, this kind of upward track moving against this overall bearish track for Tesla on the weekly chart. And here you can see on the daily chart, we've got a 30-bar cycle, got up towards this resistance zone yesterday and backing off today. Here's our support zone, just getting to the top of that. We have a daily cycle timing window that runs from April 9th to April 17th. This could end up being a positively configured cycle if it ends higher than where it began. So far, holding up nicely, and then make another attempt to get a little bit higher here before it fails. This cycle is due to end 525. So that is still just before this weekly cycle timing window is due to begin. So that one is not quite in sync. Let's move over to Bud. And let me zoom in a little bit so we can see better. Okay, so here was a very negatively configured cycle, meaning that it ended much lower than where it began, almost back to this old low from 2022. And now we're right at this 78.6% fib of the move from here down to here. So momentum is still very positive, so it could easily make an attempt for this high back here at 67.91. We do not have a timing window due out until that July time frame. July time frame again. So this one still looks good. Momentum positive, very firmly positive. Let's move over to the daily chart, see if we can dial into what is happening. Here was where that intermediate low formed, and then a positively configured cycle almost swamped, didn't even get to the 23.6% fib, another giant move up. And now we're getting some sideways consolidation, still holding above that 23.6% fib. We are inside the timing window when we would expect this current daily cycle to form a trough and then move up again. So momentum is still positive. The reversal scout has turned over. Slim ribbon is still positive. So I would expect this to make an attempt in the coming weeks for another high. Let's move over to SMH. This one, we had a request from one of our members yesterday that we do the monthly analysis. So let's take a look at the monthly long-term analysis first. This is a 33-bar cycle. And let me just zoom in a bit more. And you can see that we have a monthly cycle timing window that begins in June of 25, runs through November, end of November 25. So we've got our reversal scout having turned over after we got up to this long-term 161.8% extension. So with the negative momentum, now we're moving down. I've got two projections in here. The top of the support zone in the June-July timeframe. And that is because over on the weekly chart, that is when this current weekly cycle is due to trough in that June-July timeframe. So we could get our long-term low there, or the subsequent weekly cycle is due to trough out in the winter, that December timeframe. So this is a possibility if it wants to continue with its weakness, that will show us in the next weekly cycle, and we could get lower out into the winter. So we'll have to wait and see how this subsequent weekly cycle is shaping up. But for now, this one on the weekly chart has broken below the cycle low support. Momentum is negative. And if we were to get a bounce up into this zone, we would expect that to fail going out into that mid-May to late June timeframe. On the daily chart, You can see what's happened. We got up into this resistance zone after a negatively configured cycle, and now we have almost given all of that move back. We do have a daily cycle timing window that's coming up in early April, April 4th to April 14th. So perhaps it holds here at the cycle low support around 210.5, or perhaps even lower. That's SMH. And we also had a request yesterday for the monthly and weekly analysis on IGV. Let me just pull that up. That is a tech sector ETF. This has a 34-bar cycle. Again, we haven't got a negative momentum yet with the reversal scout, but it is starting to curl over and prices below that, almost down to the top of the support zone here. We do have the monthly cycle timing window that runs from August to the beginning of 2026. And over on the weekly chart, you can see that we had this move up to the top of the resistance zone and now backing off. This cycle is the one that corresponds with that monthly cycle timing window. So this one is in sync. So we would expect some weakness in here. It may chop around before making a move down. And that I don't have a daily chart on this one. I just had the monthly and weekly. So this is looking quite weak.
Katie,
And
if you saw that break below that cycle low support, then what?
If we saw the break below the cycle low support, it depending on when it would come, if it came within, the next week or two, beginning of April, then I would have to wonder if it was a late low, even though this had moved up into the resistance zone here. So I'd have to take a look and see if we were going to form a late low here. Because
Okay.
it is within the realm. But if it happened, further out into the summer, then this would just be a very bearish left-hand translation, leaving this entire time out to November for a decline.
Okay, very good. Thank you.
Sure. And I will stop sharing and give it back to Slim.
Okay, great. Interesting on that last chart, because you can see how that last weekly aligned nicely with what you had projected out for the monthly, which says that
Yes.
once there is a breakdown, then it's pretty likely that that's going to be weak all the way through close to the end of the year.
Yes.
So that's interesting. Okay, that's great. That's all the questions we had. Kind of a light day. And we're going to move on. Let's turn this over now to Matt, who's going to give us a look at our level 3 special, which is now wrapping up. So a huge amount of analysis and educational content that we offer. Matt, I'm going to turn this over to you.
All right, thanks, Slim. Thank you, Katie. Great work. All right, so you should see the homepage here of askSlim. For those of you that don't know, at askSlim, we provide technical analysis services, trade planning tools, and comprehensive education for various trading styles, including a separate day trading service. So I'm going to take you over to our memberships area, and you can see that we have what we call 4 core membership levels, level 1, 2, 3, 4. And then we have our standalone day trader service for those of you that are interested in the intraday markets, specifically S&P 500, the Nasdaq, the Russell, and we do some coverage also on the diamonds. So as you move to higher membership levels, what happens is that the amount of coverage expands. So the universe of symbols that we cover in terms of markets and futures, that will grow. And then additionally, your access to our trade planning tools. And then specifically in level 4, you get direct access to our Thinkorswim charts. The charts that you see us analysts work on, we actually share with our members. So those are the membership options that we have available. And as Slim mentioned, we are doing a level 3 special. So you should see up here on my screen the level 3 slide here. And we have a really robust mix of products and services that support the trade planning process and really every step of the way, from understanding our methodology and then how we translate that methodology into a trade planning process. We also have tools that can help you determine directional bias at multiple time frames, and that is with our two most dependable momentum indicators. That would be our Reversal Scout and the Slim Ribbon. I'll be doing a demo of these services after our show ends today. So if you have any interest, have any questions, feel free to stick around. I'll probably spend about 10 or 15 minutes and go through it. It should be pretty eye-opening because I want to go over an update that we did with the MCM. Some will probably demo this a little bit here in his segment, but we've expanded the symbol list significantly. We have over 300 symbols now in the MCM Pro, which is now available for our level 3 members. And we've also increased the number of notifications that you can set for yourself from about 100 to 200 for level 4 and up to 25 for level 3. So some significant improvements, enhancements to that MCM. Okay, that's what I have right now for our review of the level 3 promotion. That, by the way, is ending on this Sunday. So it is 35% off. You get that for $77.33 versus the $119 regular monthly price. Again, it ends on Sunday. It is a recurring membership, but you can obviously cancel at any time. All right, the other announcement that I wanted to make for today, very brief, is that if you're part of the askSlim community, if you're a premium member, you can be part of the next huge phase of our askSlim development. You can join our askSlim Innovation Advisory Group. So we put out some information on that over the last about week or so. And this is a voluntary commitment. It's exclusively open to our premium members 1 through 4. You will directly participate with me and the team in terms of providing your feedback, your input. We'll have some fireside chats. We're going to do a lot of back and forth, whether it's through Discord or email or surveys, and then obviously live through Zoom. I will be recording those. We'll be doing this on a quarterly basis. So our Q2 2025 group signups will close this Monday, and we'll have a kickoff event next Wednesday. So if you have interest in joining this, let me know. I'll be a select number of our premium members. All right, that's what I have for now.
All right, I'll grab this back. All right, great work on that. Reminder to everybody that after this show, Matt is going to continue that and do some demos on the great content that's in level 3. So stick around, don't leave. All right, stock market analysis and projections. We always want to share this slide with you, which essentially tells you about our approach to analysis and about you using our analysis and the important aspect of trade ownership, which, by the way, we have a video on that in our video library. So I think you'll find that very interesting. You always must own your own trades. All right, for this week, well, we had an index rebound, which it gave up the gains. Markets are now fractionally lower for the week, and before you know it, it might actually be 1% down for the week because as I speak, the markets are falling. So this reading was just a little while ago, and the markets are moving so much that probably will end up differently than where it is right now. Tariffs are in focus as analysts believe they're inflationary, and everybody is nervous about higher prices, and I believe that actually higher prices slow the amount of buying and that ultimately tariffs are going to end up to be deflationary. Add to that, cutting the size of government, which we see is going on, and cutting that spending is deflationary. Look at Lulu, down 13% on earnings, and they came out with a warning that consumers are pulling back. So certainly the consumers are overspent and afraid of what's going on right now. So Lulu warns that consumers are pulling back and consumer type stocks are getting hit pretty hard. The PCE came out, which is the Fed's favorite inflation reading, and that was just a little bit hotter by 1/10, but bonds didn't care because now bonds are ticking up on Friday here because of concerns about the economy. And as stocks get sold, money is moving into the bond market. Now, the bond market has been weak, and I'm going to show you an interest rate chart in a couple minutes that really speaks to the fact that I think that interest rates are going to fall and that is going to be a result of money moving in to bonds as the stock market falls. So I think that we're just getting into what will be a favorable period for treasuries and a period where interest rates fall. Now, don't hear me saying that the Fed is going to cut rates in any significant way, because we've seen bond markets move with interest rates moving, a point without the Fed, or opposite to what the Fed is doing. So I think the Fed maybe only have, one or two cuts this year, but I think that the bond market will be more volatile than that. Short-term analysis suggests that there will be further upside attempts ahead and then trouble. However, the market right now is getting to some levels where it may warn those upside attempts will be feeble. And I'm going to show that to you as we move into the stock market analysis. Before I get there, just a reminder, our level 3 special, we're in our final 3 days, you get 35% off on that. And if you're watching a clip right now of this analysis on the stock market, Matt has in the full show a much broader explanation of what's in this special, so you'll want to watch that. Or go to the top of the website where it says special offer, 35% off, and you can get the information right there. All right, stock market. We're going to look at the VIX, the S&P 500, the Nasdaq, and the TNX, which is the 10-year yields, multiple time frame analysis. Short-term rising phase established, and the resistance is proven. As you see, it got right to it and then turned right back to the downside after that. The VIX helps us with timing, and there is a warning from 10-year yields. Intermediate risks are high. And as I put posts out on this show coming up, I made sure that I mentioned there is a bearish warning. We've been warning about that. And now as the market gives up most of this rally that we're looking at, then it says to me, there is trouble out there. So let's take a look at as we switch over. Now I want to look at the VIX first. And so here's the VIX weekly, daily is what we're going to be concentrating on here. Let me just expand this for you to see on the weekly. So you can see the weekly cyclical patterns in here, which are very nice. It's a very consistent rhythm in there. And of course, when you get towards the end of a cyclical pattern and the VIX is falling, that's usually where the stock market is rallying. And over here is where the stock market starts making peaks. And then, of course, where you get upside spikes is where you have declines in the stock market. You had one of these right over here. And note, as we're getting down back to the lows, well, the VIX isn't really getting up very high in here. I actually think that the big risk for the stock market is in May, June. Now, it could get worse. It could be earlier based on what we're seeing here in the S&P 500, is that and the Nasdaq are getting down to some key levels. So right now, the projection is such that probably the VIX has another pullback, the market has another rally into late April, so about a month from now. And then when you get over here, May, June is where there is a lot of risk on the downside. When I show you the analysis on the yields, on the 10-year yields, you're going to see how this coincides, because if the 10-year yields are going to fall sharply, that would coincide with money moving into treasuries as the stock market falls sharply. So that's why I'm looking at this correlation, this period right in here, where your April, May, June, where it's very likely that you will get a pop up in implied volatilities. They could get up to, back to this level, which was around 30, but they could go to 40 or 50 during that period, as that would be the levels where there's a panic into buying puts for insurance. So right now you can see we're in an area where the stock market could bounce, implied volatilities could pull back again for some period of time. I'm just going to call it maybe 3 or 4 weeks. When I look at the daily chart in here, and I'm just going to blow this one out for you right there, you can see the cyclical rhythms that are in there. Now, those of you that are new to cycle analysis, what these brackets are on the bottom is a drawing tool, and it just simply helps us see the the flows, the movements, or the heartbeat of the market. And money flows is the way we really look at it. And when VIX is coming down, money is flowing into the market. There's not a lot of pain going on. And as the stock market had a rally back in here, then VIX was falling. But now you can see it's rallying again right there. When I project out over here and look at this cycle, that points to around May 1st. So I just said end of April potentially for the time period where the stock market could hold up till. So that means that the stock market's going to have to, get to where it's not selling off like it is right now, with right now the S&P's down 100 points intraday here, a midday on Friday. Note this orange dots in here. When you get those orange dots, it is a warning of an extreme overbought or oversold condition. In this case, the VIX was extreme overbought, and that means an index bottom was pending right over there, and that's actually what happened. So right now we're getting a neutral reading. I don't really have anything to give you. See, the same thing happened over here. Those of you that want to learn about our OBI option bias indicator, write to Matt at askSlim.com. He'll tell you how to get information on that. It is a great indicator. Here you could see this is still red, which is suggestive that this move up in the VIX is going to stop, and that the panic that's going on right now will probably end. But I think this analysis is important. The VIX really helps us time things, and right now it's saying to us that, well, April could be okay. In other words, you could get to where you stabilize here, and then April kind of holds on until it doesn't. And then that late April through early June period is very risky looking at that. So now let's switch over, and I'm just going to go back to where I could see the MCM, and we're just going to put up SPX here, and I'm going to move off of gold on here, and then we have the our indexes there on the MCM. Remember, the MCM is a level 3 and 4 application that's fantastic. And this is one that you would get with the level 3 promo that we're offering and ending this weekend. So here is the S&P 500. Let's just blow this up. DJV sent me an email that some of the stuff is missing off of the charts that we share, a couple of the indicators. So I'm going to fix those if you did, DJV, if you didn't see the message I sent. So here's the cyclical patterns in here, and you could see this is where the two cycles meet, and that's where the declining phase is. So in other words, money flows in, money flows out. The longer, more dominant it is, the longer the holder, essentially, when you look at that. If I'm looking at monthly, I'm looking at investors, basically. When I'm looking at weekly, well, then I'm looking at kind of intermediate holders in here, and then so the minor cycles are probably more in the short-term category. And when they're both liquidating together, you get the declines, like you saw right over here, the minor one right over here. But look at this low right there that was broken. That says that it's very likely that a decline is going to come out into this May-June period. That's what I just showed you out on the VIX. And when I show you the interest rate pattern, you're going to see there's a correlation that's very important. And so we're still looking for a failure in here, but based on what I just showed you in the VIX, it could hold up here and then just keep bouncing around in here for a few weeks before really taking hold and getting sold. The most bullish case I can make is a test of 54.85. That isn't very far down, a couple percent from here. But that's a bullish case, really looking for a move under to 5,400 or potentially down into this area in the 5,200s, or at an extreme at about 5,100, which is a monthly fib extension, 38.2. So that's what the targeting is. This is pretty extreme. It would mean the market's going to be in a pretty good free fall, and that would be about a 17% decline off the high, which is just a little bit more than a normal correction. So that's certainly not yet a bear market if it gets down there, though a lot of the tech stocks are already well into bear market territory. You want information, of course, go to askSlim.com to the top, to the workshop tab, and you'll learn about our cycle analysis workshop that you can get. So here is that's the look at the intermediate right there. Let's just look at the short term on the S&P 500 on the daily. Now it's interesting, I updated the charts this morning, and when I did, I put in these minor supports right over here, and here's the 78.6% there. Let's just get a little closer look here, as you can see, and it got through all of these minor supports right there, and here's your 78.6 at 55.66. That would be a problem area if it gets down through there. Had somebody send a message today, well, tell me where the reevaluation levels are. If it gets under this level right over here, then I think the probability of getting back over this level, which is the high we made last week or the early this week, the probabilities of that will be small. So in other words, gets under here, you probably get some rebounds in here, but it's a lot of trouble. If it gets under 5504, then you'll have a breakdown, and that will be awful. And then you could very well be in a free fall if that's going on. Upside, you would have to get way up over here at above 6,000 to get out of this, to reevaluate or repair this very bearish scenario. And I think based on where we are now, that is not likely. I've seen a lot of analysis out there that is looking at charts that says this, bear flag. They looked at this bear flag here in the daily chart and said, well, we've had tons of bear flags over these last couple of years. Most of them have come with momentum very strong on the weekly chart. In this case, momentum is very weak on the weekly chart. And you can see that in our reversal scout, which is very weak right over there. So the probability of surviving what is a bear flag, well, it already has not survived it, as you can see. So those key levels down over here, as I mentioned, 55.66. If it gets below that, it's not likely we're going to get back up to this rebound level that we've seen so far. Let's look at the NDX also, which looks pretty similar to this, and blow up this weekly chart. And you can see the same thing. I mean, really projections down into the 1800s down here. That monthly 38.2 is just around 17,800, 1,500 points from here. This area right over here, where that 78.6% support is, that looks like a reasonable target into these areas near 18,000 on the downside. And that would, again, take you out into this May-June period. This is worse because when I look at the daily chart here, you can see it's already broken that 78.6%. So these supports all have to come out because they're now meaningless. Those were minor supports, which were based off of this low and this peak. And now what we're looking at is this minor third and this minor half cycle. And this takes you out to earlier to mid-April. This takes you out to mid-April there. See, this is the concern. If you don't hold this at 19,152 support, then you're already going to be in the downside resumption. Right now, it needs to hold. It needs to pull up in here and get away from this problem area. But the fact that it's gotten down to that level is bad, and likely means that this intermediate momentum that you see right over here on our reversal scout is so powerful that it already aborted this upside move. And again, as you see here, this resistance level is now proven, just as it was in the S&P 500. Let's go back there for you to see that it has essentially proven this resistance area right there and now moving down. So this is really extremely negative when you look at that. You know, it's had the opportunity to rally. It couldn't. Now it really needs to make a stand where it is, or there could be a lot of trouble in the stock market. Let's take a look here at the, I'll look a little bit more at the conditions in here in some of the stocks in a moment. But you can see here on the indexes on the short term, you're looking at bearish to slightly bearish, though the Dow is neutral. So in other words, they're moving into some of the safer stocks, as the market moves down. That's kind of a, a change in allocation that we're seeing right there. And the IWM is the most bearish, as you can see. Let's just look at the intermediate term here, and you can see that the IWM is neutral, is bearish. The rest of them are in neutral category for the intermediate. So that upside bounce gave them a little bit of an improvement. You can see these upticks right over there that occurred. That gave you a little bit of a bullish change there on the intermediate that brought them to neutral. So there's nothing to be excited about there. The short term is still a little bit bearish, and there is hope for them to begin to move to the upside. Before I look at some stocks there, I want to go back to the conversation that I had about the TNX, the 10-year notes, because this is, to me, very important. There's a lot of times when 10-year notes fall, rally and the yields fall because there's a flight to safety, money moving in when there is a good-sized decline in the stock market. Look at the cyclical rhythms and the harmonic families on the bottom. This is just absolutely incredible because the rhythms are just spot on. I mean, talk about having a guide to trading a specific sector. This is an amazing guide when you look at interest rates, which are inversely correlated to the bond market. So where are we now? Well, if you look right over here, I want you to look at this cycle. See the intermediate cycle right there. You can see where it bottomed here and then rallied for a couple weeks, and then the momentum turned negative. And then because it broke this low right over here, it's set up for a decline all the way through the next time when there was the nesting of all the cycles of the different periods of holders, as you can see, which essentially was money moving into the 10-year bond, the 10-year notes. That's what this represents. Then when you moved up here, money moving out of the 10-year notes as yields was rallying. Look what happened here. This is identical to this, where you had the rally, the break below the cycle low, and that points to a decline here in yields out into May, June. That's exactly the inverse of what I'm telling you in the stock market. So yields are likely to fall, or that's positively correlated with the stock market falling or the bond market moving up. This is a sign right over here to me that two things. Number one, the bond market is likely a buy because it's had a pullback and now getting ready, I think, to move up. And if the stock market holds for a couple weeks, well, maybe this doesn't move that much right now. But then here, this is a big move down into yields where they get down to 4.6 to about 3.9 right there. And that's money flowing into the bond market as these yields fall. And to me, that correlation is a big warning about the stock market, and that period in May, June could bring a sizable decline that would push these yields down. So I thought that was very important analysis to this discussion, going back to the S&P 500 and how that decline in yields or rally in bonds exactly lines up with the stock market, which is, to me, astoundingly important information. Bond yields to fall, bonds to rally, because money moves out of the stock market and into the bond market. You've got to be very cautious. If the low gets broken here on these daily charts, we could be into a free fall time period, and you don't want to be buying that falling knife, as they say in the cliche. So possibility for some rally if it holds up here for just a few weeks, but a lot of risk there. Let's just take a look here at the individual stocks as we look at the conditions in here. Let's start out with the ones that are very bullish. Now, we've added a bunch of symbols in here, as Matt mentioned. So we have our algorithms built into this, and it just tells you which ones are bullish, very bullish. You can get notified on the changes in there just by choosing the notifications and clicking the ones that you are interested in getting, and you'll be notified in that. So the ones that are very bearish show up right there, and very bullish right here. Let's just get rid of that notification, and let's scroll here, and you can see what we have here. We have gold stocks and silver stocks, and those ETFs as very bullish and remaining so. There's silver stocks. Interestingly, McDonald's is very bullish as money has flowed into there, I think, as a safety bid. Now, today it's getting slammed as the consumer stocks start to get hit. And there could be a warning that that is beginning to change on McDonald's. Chinese stocks, Baidu, there's silver, Newmont, the junior miners right there. You can see all the ones that are bullish and all the ones that have kept you on the long side looking at that. And all these are very bullish. Telephone, very bullish, because that's, of course, a flight to safety type stock, because you can get dividend yield on that. And just a number of these in this category. Cigna, which is an insurance stock, very bullish as you look at that. So this is all a lot of great information. There's some more gold stocks showing up right there. Now let's take a look at the ones that are very bearish. Now we're looking at short-term conditions right in here, and you can dial those in to near-term, intermediate, depending on what type of a trader you are. Intraday, only level 4 has access to the intraday ones that are there. And let's take a look at the ones here that are very bearish. As you could see, and a lot of stocks in here that have gotten hit. Nucor may be based on the tariffs getting in there on the steel stocks. Nike, a consumer stock, of course, and that's had problems. Walmart was being bought like crazy, and then it turned around to the downside. And you can see all of these stocks that are very bearish. Wheat, very bearish. You could see that. The healthcare stocks, very bearish. IBB, very bearish. LVS. Microchip, of course, and a lot of the chip stocks are looking very bad. And a big list in here, as you see, of stocks that are very bearish as I keep moving down. Now we're in the bearish category. So wanted to show you this. This is a great way for you to get a real handle on the conditions. And if you're a short-term trader, let's say a swing trader, then you'll be looking at near term, and you can dial into those also and get a good sense for that. So that is a look at the MCM. That's a look at the S&P 500. I hope that the discussion of that correlation to the VIX and the correlation that I showed you to the 10-year yields resonates with you, that it makes sense, because it's going to be that's information that's going to be important to us moving forward. If this market continues to move to the downside, then you'll start to see the bond market really start to get bid, yields start to fall, as I think money begins to move into a place of safety. That is it. That's everything I'm going to show you. If you're new, start learning from our team of pros. Go to askSlim.com and look around at the broad content that we have, education and analysis for traders and investors. askSlim.com. Hey, team, this wasn't a very long show, but I think we did great. Are y'all there?
Sure. Yeah, we're here. Yeah, that was a great show. Just
great show,
right
guys.
to the point, very succinct with the analysis. You know, I mean, the market's selling off, and I think you covered all of the aspects that you need to know as a trader right now.
Yeah, absolutely great. All right. Well, we are going to wrap this up, and Matt, you're sticking around. Is that right?
I'm gonna stick around for about 10-15 minutes. See who wants to learn more about level 3 and see some demos real quick.
Okay, that'll be worth seeing. So everybody stick around, and of course, we'll see you in the next show.
All right, take care, everybody.
Okay, so everybody stick around that wants to.
All right, so I'm going to run through some things real quick here. This is Matt with askSlim. You should see up on my screen the market conditions monitor. We're going to get back to that in just a second. But a lot of people ask, like, what can I expect with a level 3 membership? And I wanted to touch on that first. That really there's 4 pillars of what you're going to receive in terms of value with level 3. Number one is that you're going to have ongoing analysis with the technical methodology that we have and education around that. So what you saw today live is what we do on a regular basis, whether it's through reports or videos. So you get to learn how we project in time, price, and direction using our approach as professional technical analysts. Number two is that there's real trade planning that happens, not just theory. So yes, we're technical analysts, but we show you as traders. So we wear a different hat. We go from technical analyst then to trade planning strategist, and you get to see how we apply the askSlim methodology for real world trade planning decisions. And the third pillar is that we have an evergreen trader library. So there's more than 300 evergreen videos that Slim has put together, and you really get to learn a pro trader's mindset. And that includes both the technical and psychological aspects of trading, which is obviously really important that you have to have that combination. And we bring that to you. And we have, as I said, so many videos that cover both the technical and the very important psychological aspects of trading. Number four are the trade planning tools. You got to experience some of that even in the live show at the MCM. So you'll quickly be able to uncover insights into momentum and then our cycle timing to support your short-term and intermediate trade planning and trade ideas. All right, so if you have any questions or if there are some symbols that you wanted me to even take a look at, I'll be willing to do that. But I am going to now step through just a couple of our other tools that we have here. So I'm going to pull up, the first one is going to be the cycle low timing tracker. We get a lot of questions on that one, and I want to make sure that we cover that one. And let me just get that pulled up here for us. Cycle low timing tracker is coming up. Get to my level 3 dashboard. All right, here's a level 3 dashboard you can walk yourself through. And then in our trade planning hubs, we have several of those trade planning hubs. And the whole, I would say the overall overarching purpose is to be able to structure an environment for you so that you can get yourself acclimated to directional bias, timing, and as we talk about, want to be able to project in time, price, and direction. So if you go to the cycle low timing tracker, I want to try to simplify what you're going to get from this. In that if you look at our charts, and you saw today, we have what's called a cycle low timing window. So that window of time is when we expect that period of risk to increase. So I'm going to go grab the daily chart here, one of our daily charts, go back to the S&P daily that Slim was just showing today, where we have this pretty nasty sell-off happening. And you can see that these time levels here, time stamps, 310 to 324, this was that period of risk. And you go from a rising phase to then the peaking phase, and you get into declining phase. And this is where you have this high period of volatility, typically, where you transition from the sell-off, the bottoming process, then to a rally. But when you're in a negatively configured or negative pattern structure, that's where the resistances really defend against those rallies, and you then get this sell-off. So the sell-off is not surprising. And now that we, like as Slim was mentioning, we had this also a minor low that had formed in here, right around here. And with that breaking of that today, as Slim was talking about, that really does open up the door for some significant downside risk, especially if we close around these levels below the 61.8. But most importantly, I wanted to cover these timing windows. So with all of the symbols that we do with cycle analysis, we have these timing windows, and we call those out in our cycle low timing tracker. So you have the weekly period of risk, and then you have a daily period of risk, and we indicate when those symbols are in there. And if you click on the symbol, you can see the chart. So we make it very easy to see our chart. You can see here that on the weekly chart here for Amazon, we are in that cycle low timing window for that weekly low to form. And we have the same thing when you're on the daily chart. So let's go look at AVGO daily chart. You can see here, we're just getting into that, right? So there's still some time to fall. This is why it's really helpful from a trade planning perspective when you can get a sense of time. Because if you're looking at this and your bias is negative, which it was on our site. And also you can see that the red dot here, or red box, reflecting the intermediate and then short-term condition. So when you have a red bearish condition, the likelihood of new highs is lower, right? And the likelihood of failed rally attempts and then retests of lows or breakdowns is higher. So when you have that information and you're going into a declining period, and you know that you have a period of risk coming, so you can see we get into the rally phase. It's a meager rally, gets up to about that 38.2. And then you start to struggle. And then if I go into the 2-hour chart, which I will here in a second, you'll see that things shift. So the 2-hour will start to shift, and that'll let you know that the more dominant conditions are likely now in motion. And then you can see today that the reversal scout, this was yesterday, the reversal scout on the daily, which lets you know that there was a shift here in momentum, but it was pretty flat overall. And then the one that's less sensitive is our slim ribbon. That's why we use them both, because in tandem, you get a great sense of these swings, right? So the reversal scout helps to let us know that there was a swing high that was in motion. That swing high, though, was being developed within a negative overall pattern structure here in AVGO. And then once you have the reversal scout go back negative, that's some pretty strong information there. And I'm going to pull up, let's see if I can find, yeah, this one should work. And I'm going to pull over my multiple time frame grid here in just a second. But again, I'm looking at the charts that you get to access through our level 3 membership cycle low timing tracker. So this gives me a great sense of like what are some symbols that'll be coming up into a period of risk. So whether I want to be bullish or bearish, I can then plan for those opportunities as those start to happen. The other key thing is once there's enough positive price action, Katie, who manages this, does a tremendous job. And then there is a trigger that tells her to start putting them into either the bottom pending or bottom confirmed. And what I want to do is go back to the historical data here, and I'm going to go to the 14th of March. When I go back to the 14th of March, there's some really important things you're going to notice. You'll notice that she had indicated in here the periods of risk, and there were so many symbols that were inside of a period of risk at that time. Now, why was that important? Well, that tells you that there's a lot of downside happening in a lot of symbols, and that there's an opportunity here for a shift to happen. And that's what we saw in a lot of symbols, where we had a low that formed, and then we had this rally attempt within the confines of this more negative overall weekly pattern structures. But this is how you can see what is happening in terms of time. And then once we start getting the bottom pending, so this was interesting because the bottom pending, there was a bottom pending that happened and I'm going to pull over a chart here on a couple of these. So let's look at like LUV, which is Love, Southwest, and then AMD. So if we look up LUV here, and our level 4 members, they have access to these grids that we have. I'm going to remove the drawings. So this was on 3, if we look at the date here, 3/14, Love went into a weekly bottom pending scenario. That means that there's enough positive price action to suggest that a bottom is pending. That was the week of 3/14. And you can see, that was right around this time frame that Love went into that. And then if you're a swing, this is the point. If you're a swing trader, this gives you enough heads up that you're not too early. Yeah, I mean, you can look at being earlier. If you're going to look at being earlier based on some shorter duration time frame, we always look at smaller position sizing, but then you start to get some confirmations in here, and then Katie's going to pick up that combination of positive price action and then start indicating when those shifts are happening. So that's super important. The other one was AMD. You can see AMD on here. This was back again on 3/14. And if you're a near-term or short-term swing trader, these are very important. So you can see then 3/14 is right around here. This was a nice swing. We're talking about over 10 points that occurred in a matter of about a week. So that's really perfect for a swing trader. And now what's happening though is, now if I shift gears, and I'm not thinking about necessarily the cycle low timing at the moment, but let me go see where that is on AMD and go back. So this is the historical, a way to look at where the cycle low timing tracker was, just so we can validate information. Like if I jump to the 17th even, you can see that there was a ton of symbols that went into bottom pending status on 3/17 then. All right, but let's look at AMD where it is right now. So I'm going to bring this back to live here, and we're going to look at what AMD has to offer in terms of, I'm going to go to our charts here. Let's go to the Charts Hub. This is also available in the level 3 membership where you can use our Charts Hub. And I'm going to pull up AMD here and see where we are. So this just formed, or is trying to form it's a cycle low pending on the weekly chart. The reversal scout can't even turn up right now, and it's struggling. So let's go over to the daily. You can see the daily chart. We got up to about that prior cycle peak and starting to roll over into support. So it'll be interesting to see if it can hold up. If AMD could hold up here, I don't know what it's doing today. I'll pull that over here in a second. Let's just evaluate this. And in near-term basis, we've gone negative. Okay, but let's look at where the key levels are here. All right, so we've got, no, that's not a positive situation. If we close below that 61.8, that's going to be fairly negative. And if we got below that 78.6, then that would be really negative, and that could open up a door to a really deep decline. All right, so getting back to the cycle low timing tracker, just to wrap that one up. All right, so we have the 3 phases of the cycle low timing process: period of risk, bottom pending, bottom confirmed. We're measuring those stages very importantly as you're doing your trade planning. When you're looking for something that is in a has bullish posture or bullish stature, this is a great opportunity to start getting yourself prepared for that low to start forming. And obviously, when you have those situations, so let's look at, let's say, like Coca-Cola, for example. And if you are a level 3 member, you can request through RV's office hours for him to look at symbols. He looks at about 15 symbols a week. And I'll pull up what that looks like on Discord. I'll go over to our Discord environment here, because this is where you can connect with us analysts, is over on Discord. Office hours. Pull this over here. Just raise your hand if you can see our Discord channel here. All right, thank you, Lynn. So on the Discord channel, it is free, and it is exclusively available only to our premium members. And this is where you can connect to the analyst team, and we'll post information, announcements regarding events that are taking place. But in the office hours channel is where you can ask RV to share his outlook, and he'll do, like, here are office hours for 3/27. He covers about 15 symbols at the request of our members, and you get a chance to hear him talk out the analysis as well as some trade planning points on these symbols. It is a video that is prepared, as well as the weekly daily charts that he will put together. So my point with that is, even if it's not a symbol, as Coca-Cola is not in our core universe, if you wanted to find out, like, what is the status of Coca-Cola in terms of the cycle timing, this would be a great one to then be able to ask for RV to put together, which he would then do. And as he would pinpoint that cycle low timing window, for example, let's just say that Coca-Cola did already pull back. So this was a cycle low timing window. Now you can see that it's starting to rise again into a new rising phase. The point is that it gives you a chance to do some planning prior to the low actually taking place, so that you can get your ducks in a row on that potential next advance. Okay, that's that cycle low timing window. If you have questions about the cycle low timing window and you're currently a member, you can reach out to Katie. Katie is the manager of the cycle low timing tracker, and you can reach out to her directly. You can also reach out to me or RV if you have questions. We're happy to go over those with you, happy to clarify any confusion you might have on any of the tools that we offer. All right, let's go look at now the MCM again. And I want to see if there's any questions out in the audience with that. If there's any symbols you'd like me to review, let me know. If there's any questions that you have, also let me know. So let's just take this from a high level perspective. These are the two momentum indicators. These are our most dependable momentum indicators. We have the reversal scout, we have the slim ribbon. What we've done is we've built an algorithm that looks at multiple time frames, daily, 2 hour, 15-minute, if you're a near-term trader, and then it automatically, you hear us talk about the sum of the evidence, generates a sum of the evidence, and it does that and puts it into what we consider to be a trade setup condition, bringing those conditions together. And you can see now that what it is for the SPY, QQQ, IWM, and it does this all throughout the market session. And you can click on trade setup condition, and it's going to then auto generate based on the condition those symbols that fit that. Furthermore, let's say that you had an interest. Let's say Coca-Cola right now. I'm just using that just to stay with that theme. You can see right now that it is neutral, right? The near-term condition is neutral. Let's look at Coca-Cola and look at its short-term condition is neutral because that daily bias on the reversal scout is neutral. If we look at our intermediate, though, is neutral because of that daily. What you can do if you wanted to get alerted, though, to a change in Coca-Cola, is you could set this and you could click on, let's say, slightly bullish or bullish, and then you will receive a notification with our notification hub that we have. It's a desktop application. It would pop up with a notification letting you know that there's been a shift. Once that shift occurs, then obviously you can make some decisions around implementing a long side strategy on that. And what it does give you is the opportunity in advance to do your own planning and not have to be monitoring. So we call it the market conditions monitor. You don't have to monitor all these symbols on your own. You can do that with the system in terms of the momentum conditions. All right, I'm going to go back to the level 3 dashboard here, make sure that I just cover a few more of the services in here. And if there aren't any questions, I'll probably wrap it up here in just a couple minutes. Just seeing if we have any questions to look at. So there was a question on Exxon. I will look at that here in just a second. So as a level 3 member, there is our trade planning hubs. Real quick run through at a high level what these are. We have an indexes and futures hub. Really, it's all about convenience. So this is for the intermediate time frame. You can see at a glance the color code. We color code the condition, and that just gives you at a glance a look at what the overall condition is. And then if you click on the category headers, you'll see the updates that Slim puts in here. We keep an archive of his last couple, and then when he sends those out via email, we add those in to the futures hub, and we have that for each of these main categories. When you click on a specific symbol, you can see that the static chart that we've prepared the day before, and this gets updated after the market closes in terms of a new static chart being uploaded, typically late at night or even into the early morning hours, but it's always updated by the next day. So that would be, those hubs are similar in that fashion in terms of what's available in them. I talked about the charts hub. That gives you all of the core symbols that are in our universe. There's about 83 of them. And you can quickly scan and find, you could click on, just go from one to another to see if there's anything that catches your eye. Like now I look at, what's fun is you look at these and you can start to see opportunities here, either long side, short side. You can see like Amgen. Amgen's now in a daily cycle timing window. This is over at the moment, intermediate pattern structure is positive, but short term is getting a little bit more weak here. That could, see this pull back a little further into the cyclo timing window. And then Katie would indicate once it showed some positive price action. And if it's doesn't get too deep and close below that 78.6, it might have another opportunity to get back up to retest over here towards those prior highs. But with the overall weakness in the market, you really got to pay attention to those rally attempts right now. So that's the charts hub, just super efficient as an analyst and someone who's doing trade planning. You can just jump into these symbols so quickly to get an idea of of what's going on a weekly basis, and then also on that daily basis. So, Boeing's been one of the stronger stocks of late here, and you can see some of the support zones that we've identified. All right, let's just keep going here, and then I'm going to get to the symbol request. There's the daily snapshot. So that gives you a look at the indexes, deep dive into the indexes with all of the charts. This is available in level 1, but obviously you're going to receive that in level 2 or level 3 as well. So that's a technical report on the major indexes that's available. Then we have Slim's Most Notables. We have a live broadcast for you intraday traders. We give you a little taste of what we offer from a day trading standpoint, and I'll show you what that looks like right here. This is the I got to update I did some updates during the session today. So these are 15-minute charts, and you can see our reversal scout, which is our directional bias momentum trend indicator. And obviously, the highest probability scenarios are those when you're trading with the momentum or with the trend, and it's going to prevent you from trading against it and getting caught in some very strong moves either to the downside or the upside. And what we indicate here are the support zones. Those are going to be based on the greener colors, and then the pink and the reds are going to be for negative, or the pink and the reds are going to be for resistance. But you want to follow the arrows, and you want to follow the directional bias. And the highest probability, let's call them trading opportunities, if you are a directional trader, are going to be when we get into these yellow zones. We call these acceleration zones. And these are very, very powerful opportunities in terms of finding and capturing points in these indexes. I mean, this is a 5678 to, so that's about 12 points right there. This zone was another about 10 to 12 points. This zone was 36 to 15, almost 20 points there. So if you tally that up, 20 plus 12 plus 12, just trading the acceleration zones today, you're over 50 points in the S&P. So when you have the combination of the acceleration zone plus the directional bias indicator, that's the highest probability opportunities that you're going to get off the chart. Obviously, you want to pay attention to when you get into these key supports. But that first key support zone, when you're in the midst of a negative overall condition, and if that doesn't hold, that's not a good sign, because you might get a reaction. These are reaction zones. You want to see what happens inside of these zones and how strong are they. Like right here, we got into we came through this little acceleration zone here, came into a support zone, tried to rally, and then once you get back through there, that's not a good sign. And then like the Nasdaq, this one just did a 75 to, that's a 50-point acceleration zone in the Nasdaq. You can see how this directional bias indicator really does help keep you on the right side, especially when you have these negative, very strong trending days. So this is a glimpse into what we offer in our day trader service, but you do get this grid with these zones with your level 3 membership that you can chart stream. So we have a chart streaming service. There's 11 symbols in there, and I'll pull that up real quick so you can see what that looks like. And then we'll wrap this up after I do the analysis on ExxonMobil. So here's the chart streams service here. Here's all the different symbols. Basically what you do is you click on the symbol, and then you click play, and that's going to take you into the live broadcast of our analysis here, just off of the grid. There's no commentary. Obviously, through Discord or Zoom, you can reach out to us, and you can see what the indicators are showing from left to right. We got our weekly, we got our daily chart, weekly, daily, 2-hour, 15-minute. Again, if you're a short-term swing trader, these are fantastic to help you get yourself acclimated to the overall technical conditions, what our key levels are, even upside, downside. So you can see here, because I manage these grids on the SPY for the chart streams, got into my projections here, 1, 2, 3, failed into that key fib extension zone here, and then has rolled over. And then a couple days ago, I've added in the downside in play projections here, as the overall condition has been negative, and you really then have to be paying attention to when there is the rejection from the key resistance zones, that you then are resuming the overall negative trend or pattern structure that was in place. So that is what you receive with chart streams. You got 11 channels that you can work with here, and really you can do a ton with just those channels there. The last, I think, point I want to cover, I talked about Discord. This is really cool. Well, obviously, let me take a step back. You have trade ideas from RV here. Every week, there's probably 3 trade ideas at least that RV puts out. And then furthermore, RV does commentary in his, we call it the trading pit here. And you can just see it's just on a daily basis, multiple times a day, RV is sharing what he's seeing going on in a number of symbols, high level from top down, down into the daily or near-term conditions. And then you can go back and forth with RV and ask him questions as well in the Q&A channel of Discord that you can do that in. And the final point I just want to make for today, before I wrap it up with the analysis on Exxon, is that our level 4+ members, that's our highest tier. It's actually not publicized, but if you had an interest in becoming level 4+, you can write to me. What you get with that is the ability to get guaranteed 2 symbols per week requested. With RV's office hours, you can ask for 1 to 3 symbols a week, but you're not guaranteed to get any. It's first come, first serve, and priority with the higher membership levels. Obviously, there's always 15 symbols covered, but if with level 4+, you're guaranteed 2 symbols, a max of 2 symbols per week. But when you click on this, you get the weekly, daily charts from the team. So that's really helpful. And you get to see ideas from other members in terms of what they're following, what they have an interest in, and then you can see what our analyst team, Katie and RV, are thinking regarding those symbols relative to when those are asked. So you can see the multiple time frame analysis that the team does. So that's with the level 3 membership. Again, that's running now, ending on Sunday, 35% off level 3. There was a question about ExxonMobil, so I'm going to get to that one right now. There was a comment about the widening of the daily chart. I'm not sure for what symbol they're looking for. I don't know if they meant the zoom. Okay. All right. If you are referring to widening of a daily chart, someone messaged me about that. If you could just email me with more detail on what you're talking about, that would be really helpful. Okay, let's do a quick review of ExxonMobil. So I'm going to use the Charts Hub for that. Let's go back into our dashboard here. And go to the Charts Hub. We'll look at Exxon, and then I'll pull up the live chart of ExxonMobil. Search for Exxon. There it is. Okay, so here's our weekly chart of Exxon. You can see that a nice minor cycle low formed here, and we've gotten a pretty decent rally off of that minor cycle low. And if we close where we are, I'll look at the live chart, but if we can close above that 61.8, that would neutralize the, any kind of technical damage that was done on both the daily and weekly charts. And then that would point up to this zone here, running from about 121 to 122. So that's a look at the weekly. Again, I'll pull this up live just to see if anything's changed today. Then I'll jump over the daily chart here. And we had a ghosted cycle that, if this was showing any influence, really isn't doing a whole lot on the downside. Maybe it'll do something over the next day or two. But really looks like we have a new dominant cycle where the money flow shifted. And we pick that up that's why we make adjustments, because we want to be on top of the main money flow patterns that are occurring. And right now we're basically midpoint of the cycle. So it wouldn't be surprising that possibly we get a little pullback. It's been pretty strong. We're getting above that 61.8 off that weekly chart. You can see the slim ribbon. When things are trending, you want to look to the slim ribbon as your first line of defense when it comes to support. So that the three bands, you got the first band, which is an 8-period exponential, and we have our 13, then we have our 21. And usually you'll find support in that first couple bands. If it's very strong, it'll make another attempt, and then it would, that's how you can use it. It's a super helpful tool from that perspective. Now let me pull up the live chart and then we'll wrap this up. All right, so we have Exxon here. This is not Exxon, this is Coca-Cola. Okay, now let me remove okay, just wanted to clear that up a little bit. So you can see on the multiple time frame charts here that it's very strong right now. Exxon is, from a daily perspective, this has had a breakout above prior minor peaks, daily peaks here, and we're in a new, at least from a daily chart perspective, this is a new advance or new positive pattern structure that's forming. If I look at, and it's overextended, which isn't negative. It's typically a positive thing. So if you look at our other complementary bias indicators, and we look for directional bias on here, you can see that it's been positive P3, and then it got overextended to P2, and then it's P1, meaning it's very extended relative to its typical volatility. And then in our stochastic momentum index, you can see the duration above that 75 now is really picking up, and that's not a negative thing. It is definitely extended in the near term here, short term. Get a pullback, like I said, into the slim ribbons. And if I'm looking at it from a retracement perspective, you can see here I would be watching this 115.50 to about 113 area for the pullback, and then a likely resumption in the price action here of Exxon. I just want to see where we have that, getting back to that 78.6. Yeah, so the 78.6 is about 121.62. So let's just do a hypothetical and say there was a pullback that occurred to right around at 38.2. And then if I do what I did is a fib extension draw from this swing low to this swing high, back to this hypothetical swing low, and I want to see where that gets up to. So it all depends on where Exxon forms its next low. That would help me determine that next likely in-play projection. But right now, it looks like 121.62 is the target on the upside. Some supports, again, running 115.5 to 113.25. And we haven't really rolled over. The only thing that's rolled over is the 15-minute. And if the 2-hour rolls over, that would be a first indication that we have probably this peak happening. So that would be what I would be looking for in Exxon is a fairly narrow pullback. Unless it closes below 109.50, this is positive in the short term. And then if we get back above 121, about, let's say 75, and close above that, that would be very positive for the longer, more intermediate time frame swing trader. All right, that's going to be everything for today. Appreciate you sticking around for this final segment. Wish everybody a great weekend and great trading.